Good morning and welcome to Everyday Money Matters on Lagos Talks 91.3 FM. My name is Adu, and it's a beautiful Wednesday to you. And this is brought to you in partnership with our friends at Nairametrics. And today, being Wednesday, I have the money team with me. And starting my introductions today, I have the finance man himself, Mr. Olumide Adesina. Good morning, Olumide. How are you doing today?
Good morning, others. It's a cold Wednesday morning, but yeah.
Good to have you here. And I'm sure that others will be joining us as we go along in the show. Oh, by the way, just thought to mention, Nairametrics is your number one hub for personal news and financial news, as well as news that are making the rounds in the country. As much as you always want to go there to get articles on money and the stock market and how to improve your personal finances. It's also a hub where you can get current, trendy, and verifiable news for your consumption. So do check it out at nairametrics.com. Anyway, let's get into the questions today. If you have one, you can send it to us on WhatsApp. The WhatsApp line for the station is 0809 234 5913. So Olumide, let's get into it with the UN report stating humanity is on code red, and that came out on Monday. Do you think it's a good time to get on ESG stocks? And do they even exist in the NGX?
I think we said this before, but just for the historicals, yeah, this is always the best time to consider this for, especially for investors that want to have foreign exposure. You need to understand that just some hours ago at the US Congress, they passed an all-important $1 trillion infrastructure bill, and substantial amounts is going in that area. You know, we're talking about renewables, we're talking about growing concerns that we are seeing climate changing, and it's already prevailing in Nigeria. You can see the intensity of flooding across the coastal regions, and the fact that humid regions are also suffering droughts. That tells you that investment along that line might be very cool. So we're looking at renewables like one of the most interesting stocks to look at is Tesla, for example. You need to see the fact that even the world's most powerful political man, I'm talking of Joe Biden, retweeted on his Twitter handle that they're going to invest in renewables. So it becomes no-brainer for you to look at undervalued stock. So for me, the fact that Tesla defies accounting metrics, when you look at price to book ratio, earning per share, all these things, the stock still looks like something very interesting to hold on to. And that's why you saw on Monday, Elon Musk had a daily gain of about $4 billion. So that's something to look at. Then we have other stocks too across Europe and things. So I think for investors to be able to identify those stocks, you need to be conversant with financial statements and our reporting at Nairametrics. We usually release some of these stocks on our platform. Then for NGX, you need to understand that Nigeria is pretty much a new market compared to these markets I've mentioned. So we don't really have such exposure. But for investors that are keen on investing, we have bonds like that tagged as green bonds, where you have exposure to all these renewables.
Incredible. Can you hear me?
Yeah, I can. Yeah.
Oh, okay. So let's still talking about the US. Recently the US has seen a little bit of inflation. Would that have any effect on Nigeria, considering that a lot of things we do is denominated in the dollar?
Exactly, you just said it rightly. It has serious impact. It has serious impact on Nigerians. In fact, I feel that it's one of the biggest threats that people are underrating, because look at the fact that the US inflation is at record high, 5.4%, and the fact that you need to understand that we are import driven. We import basically most of our things denominated in dollars, and that also has impact. So basically, it's like we are also importing dollar inflation. If you look at the fact that I'll give you a popular example, the iPhone, for example. The last time Steve Jobs was on the podium, the cost of an iPhone have risen more than 2,000 basis points. And you see, these are things that a number of Nigerians keenly use. So you can imagine that also has affected the cost at which Nigerians buy these things. Then also you need to look at other commodities, crude oil prices. The fact, we are export and of crude oil prices, but the sad thing is that we import most of our refined petrol. So that has also affected our earnings. So that's why our budget is basically on deficit, because that's where most of our chunk of importation come from. Then the fact that we're not a manufacturing-driven economy is also sad. The fact that we don't really have, when it comes to when it comes to industrialization, Nigeria lags behind. But the interesting thing about it is that I think the digital economy is showing some kind of improvement. So we see that at that point, the maybe that will help, because the inflation rate at it is has eroded a lot of people's purchasing earnings, especially the middle class that are not entrepreneurial. They just believe on peg earnings. So that's really weighed down on them. So I feel that the best way to get out of this is, like I said, you just have to start earning. Either you start earning foreign exchange, or you start having other means of income stream. So basically, those that seem to be working ahead of the storm are people that own businesses that have been able to position their business to outside players, freelancers, those that have jobs outside the world. You can also edge against that. Then also those that also have been able to edge their assets properly. So I'm talking of those that invested in crypto assets long time before the bullish run, those that have invested in the stocks that we mentioned earlier. So I think that's what's really happening right now.
Speaking of crypto and its glory days, this person is asking us a question. It says, with Bitcoin well over $40,000, are we in for a crypto market bull run?
I think I've always said that the market has never been in a bear run this year, because you need to understand that percentage gain of Bitcoin, if you look at the historicals, thousands of percent. So I think the problem people had was that people they have these short buyers when you look at the time horizon. In the past, just this year alone, Bitcoin has recorded intense gains. So when you talk about the bullish run, are you talking about day to day, or are you talking about week to week? But I think the bullish run is still in play. If you look at the holding capacity of long-term investors, that's never right. But this is my concern. The market is a very volatile market. Don't forget that the fact that Bitcoin has given thousands of percentage. So pullbacks of a few percent of hundreds of percent might weigh in on retail investors. So what I advise people is that, well, if you've missed the train, try to understand why the train is moving and the pace the train is moving. So if you want to enter the market, for example, you need to look at drawdown risk. And presently, the drawdown risk on Bitcoin is quite high than what it was years before. And that's because we see crypto regulation and things like that. So the fact that Bitcoin has risen some basis points upward doesn't mean that it's time for you to go in. But if you look at the opportunity cost, the fact that inflation is, like we said, the way banks are printing money around the world, and the fact that there will be only 21 million Bitcoin, you might consider you want to hedge, but also weigh in the drawdown risk. So that's why most institutional investment banks will advise their clients to not put more than 5% to 10% of their total earnings in that asset.
Right. One more question before we take a short break. This person is asking, because we're still in the US market space, is saving my salary in dollars a good way to preserve my capital? And you talked about hedging funds. So this person is asking, is saving my salary in dollars a good way to preserve my capital?
Yeah, that's it's a bit tricky, because definitely when you save your earnings in the USD, it means that you mostly bought that at the black market, except you had foreign earnings, except you're earning in dollars, except you got PTA allowances and you decide not to spend it, things like that. So if that was the narrative, definitely that would be a very smart move. It means that just even against the black market rate, you've gotten about 900 to 1,005 basis points, because at that rate, you are getting it at 411. And if you look at the fact that the black market, you get it at 505, that's a smart move. But this is the problem I have. If you earn in Naira and you say because the Naira is weakening, you are changing your currency to the dollar. Now, this is where the tricky part is. Yeah, if you buy at the black market, you're buying at 505. And we're talking about inflation right here. So the fact that even Nigeria's currency might be weakening, the dollar too is weakening. Also, if you look at the opportunity cost at which you are going to save in, it means that the Naira has to lose another 200 basis points for you to like break even. So yes, it's good in the long term if you have deep exposures in foreign assets, or you're looking at the long-term horizon. But the tricky part is that if you're buying these things from the black market, getting too exposed in that currency might not be a very smart move. So that's my own take. But the dragon is that the dollar is always going to be stronger. Yes, it's always going to be stronger. But what is the relative cost at which you are buying it? Because everything you do in this life is about value. So whether you are investing in the right investment, is the value you get that really matters. So if you are buying the dollar at a premium, then I think the erosion of the gain will be limited.
Oh, thank you very much, Olumide, for that. When we come back from this break, we'll be talking about the infrastructural bill that you talked about and how it affects crypto, as well as other things in the crypto market. So don't touch the dial. Everyday Money Matters will be back shortly.
Did you know that your Standard Chartered Visa credit card gives you instant access to cash? With your credit card, you have access to funds whenever you need it. So whether you're hanging out with friends, need to send money to your loved ones, need to take care of some personal and domestic necessities, simply transfer funds from your credit card to your savings or current account, or pay bills directly from your credit card, all on your SC mobile app. For more information, please send an email to creditcards.ng@sc.com or call our call center on 01-270-4611 or toll free on 0800-123-5000. Standard Chartered Bank, here for good. Can't think of a reason why you should apply for a Standard Chartered Visa credit card? 1, a 50-day interest-free period? That's unbeatable. We've checked. 2, get up to 5 free supplementary cards for your family members. Plus, you earn redeemable reward points every time you use your card. A Standard Chartered credit card is the right card for money when you need it. For more information, please send an email to creditcards.ng@sc.com or call our call center on 01-270-4611 or toll free on 0800-123-5000. Standard Chartered Bank, here for good.
Everyday Money Matters, EMM, is a personal finance show about money, which aims at discussing and finding common solutions to issues and questions around spending, saving, and any financial issue. Join the conversation today as we discuss issues that bother on consumer spending and savings on the show. Everyday Money Matters with your host, Ugodre Obichuku. You don't want to miss this. Every Wednesday from 7:30 a.m. to 8 a.m. on Lagos Talks 91.3.
Welcome back to Everyday Money Matters on Lagos Talks 91.3 FM, brought to you by Nairametrics. And here with Olumide Adeshina, we're talking about the questions that you have sent in to us and the different requests that you have made. I mentioned before we went on the break, Olumide, that that U.S. infrastructure bill that you talked about that was signed just moments ago, what's the importance for the crypto industry? Because that is a major player in that particular space. Wouldn't you agree?
Okay, just a brief introduction about the infrastructure bill. Just from the word, the bill is basically about spending. The Americans feel that their infrastructure is a bit obsolete when compared to other emerging markets, especially Asia and the Arab world. So the Joe Biden administration felt the need, the importance to invest in renewables, fast internet and better routes and airports. So, the other party, I'm talking of the Republicans, they were a bit concerned because they felt that where would those funds come from? So I think one of the compromise was the fact that the crypto market will have to contribute some of the quota. So this is what is happening. Basically, they're trying to raise, I think, based on present statistics, about 28 billion should be able to come from that angle. The fact that they are looking at investment along that side. So what's really causing the problem is that the bill says that brokers will have to report transactions to financial regulators or tax authorities. But that's not the problem. But the problem is that definition of broker. A broker basically is an intermediary between a buyer and seller. But the law states that Bitcoin miners, software developers are also brokers. So I think that's where the concern is. A lot of stakeholders feel that that is going to be very clumsy and very unobjective. So the fact that Elon Musk even kicked against the fact that the bill was hasty tells you the fact that a lot of people see this having a downward effect. But if you look at the market right now, I think Bitcoin is still at $45,000 above 40K level. That does tells you that I think right now the downsides are not yet revealing. But let's see how it plays out, because it still goes back to the House or the president. So maybe there might be some kind of traction or updates on that bill.
Well, in terms of hastiness, I do remember during Donald Trump's presidency, he had talked about the airports and some of these things. So maybe they might just need to go back to the drawing board and let's see how they can come up with something more robust. Anyway, still talking about the crypto market. Now, $611 million was stolen from the Poly network. This person is asking, how did that happen, considering the safety that's supposed to come with this?
It was just like, actually, based on reports, the hacker used a privacy coin, Monero, to acquire some of these tokens. And of course, you see, the thing that you need to understand is that the crypto market is very wide. So there's always times for slips and stuff like that. So this looks like a planned job, because if you look at the way the haste was carried, it showed that it was targeted at the Poly network protocol, the protocol that allows other tokens to go to other tokens and through different blockchains. So I think the narrative is that the hackers plan, they were sophisticated. But the good thing is that I think the crypto community has started hammering hard on the hacker. In fact, if the latest tweet shows that the hackers were even compromising to release some of these funds, because on Twitter, for example, the CTO of Twitter announced that they've frozen substantial amounts on that channel. And that's the interesting the crypto market. The fact that it's anonymous doesn't mean that it can't be tracked. So Binance CEO has also said they are monitoring the situation. Many crypto exchanges are also weighing in. But the truth to be told is that scammers have become on the rise. In fact, I've received a lot of scamming mails in recent days just in trying to compromise. So easy things for investors and users of the crypto market is, first, don't click on links that you are not sure of. Always check the address of whatever they are sending. Check the email address. And you see anything that says update your account and things like that, most likely these days is scam, because most of these exchanges don't really send those kind of mails these days like that. So anything that has to do with using your private information, you should always check that mail address 3, 4, 5 times. Then we've always advised investors also not to keep their cryptos on the exchange. Exchange are like marketplaces. They are very prone to hacks and things. So you can always move your prized tokens to your private wallet or paper wallet or cold storage if you're like the Elon Musk. Cold storage is one of the most ideal way, but it's very expensive. So these places, these things go offline. So you can't really hack anything that is offline. You understand? But if you can be you can't afford that facility, you can. There are other means. Paper. You can also use paper wallets. You can store your crypto assets on paper. Just keep it in diary, keep it somewhere safe, maybe your mom's house or somewhere that you know that hackers will not go after. So
How
that's
sure,
basically
how sure are you that your mom's house is safe?
because basically, if it's written in synonyms or written in codes, it takes somebody that has a deep knowledge about crypto market to hack into you. And basically, most moms are in the generation of traditional plans, so I don't think they'll be able to hack into
I'm just messing with you. I'm messing with you. So let's talk about stable coins. Stable coins have been something that a lot of people have been asking us questions about for quite a number of weeks now. The question here again is, how does it provide a risk to investors?
Yeah, the thing about stable coins is that from the word definition, stable coins, for people that don't really understand stable coins, these are kind of crypto assets or digital assets that are pegged to currencies, commodities, or other traditional derivatives. So naturally, from the word stable, they are supposed to be stable because they are pegged. So, for example, if you peg a crypto asset to the dollar, it moves just at the same value. So it's 1-to-1. But the problem we are having is that some of these stable coins have questionable fundamentals. So what am I saying is that some of them are not really backed by what they are backed. And you see, one of the things you need to understand is that the stable coins is like the currency of crypto markets. So for example, a lot of people use these things to buy Bitcoin, buy Ethereum, buy many of these coins. So these assets have systemic importance. So the regulators are growing concerned that if these assets are not really backed by what they say they are, then it means that any systematic problem or any risk in the market will pose a threat to the global financial market. And you need to understand that financial markets are interlooped. It means that they are connected. So any negativity around that side can also spread into credit market, because some of these crypto assets are also backed by commercial paper. So the narrative was that they had to start investigating. So I think we have some decent stable coins. I don't want to call names. It was just one that a lot of people became afraid of. It's one of the most, in fact, it's the biggest stable coin by market value. And the fact that most of its assets is backed by the Chinese commercial paper, which was not really stated by which either it was of good investment grade or has junk grade ratings, make investors shaky. So that's where the problem is. So I think regulators are trying to tighten that question. And the fact that the digital currency, the digital dollar is coming on board, it means that you don't really need stable coins, because the fact that you have already an electronic dollar, what the stable coin does, the digital dollar will do that. So I think
they're invariably going to become extinct very soon.
Exactly. That's where some investors are betting their money on. But I don't know how that will play out, because some of them, I think, are becoming ambitious. We can see Seku. Seku has applied to become a federal FDIC bank. So it means that they will also be able to have the kind of facilities many of the US Fed has. But let's see how it plays out.
All right. Let's take one more question before we wrap up the show today. And just for those who are listening and watching as well on the live webinar, you can rewatch and re-listen to this particular episode when you go to youtube.com/Nairametrics. So that's www.youtube.com/Nairametrics. Naira and metrics written together. You'll get to see the episode again and watch it again and be able to, relive the moments and listen to the answers given to the questions. But more importantly, if you are interested in having a more hands-on training and guidance, if I may, on how the stock market works and how you can become a smarter investor and get some analysis and some, shall I say, bespoke direction on the kind of investments to make, then subscribe to the Stock Select newsletter by going to ssn.nairametrics.com. That's ssn.nairametrics.com. and you get that Stock Select newsletter. Very quickly now, Olumide, final question we'll ask today. This person is asking about Ponzi schemes and says, what are the key things to note to avoid Ponzi schemes?
Simple narrative. Adu, the thing is that I think one of the things Ponzi scheme plays on and how they play out most especially is that the fact that do their homework. So the first thing you need to do is are they regulated? In fact, reports have shown that most Ponzi schemes are unregulated. So if you are working with an unregulated entity, then you need to be very cautious. In fact, we don't advise people to invest in unregulated entities, except you have deeper relationship, except they are your friends, except they are relatives, and it's a kind of close fund. So, well, you can consider that. Then secondly, the returns. Anybody giving you returns of, for example, 50% daily or 100% monthly is most likely a scammer, because for you to even get regulatory license, you need to show investments and you need to show how you generate these alphas, and these things are not quite easy. The fact that you see some investment giving exponential returns doesn't mean that that investment was calculated. So that's one of the things you need to understand. You need to look at returns that are giving you too good to be true. You understand returns. So then thirdly, most Ponzi schemes are you can't see, for example, you can't see the likes of the billionaire Dangotes or Bismarck Rawanis or the Foladiolas, Jimovias in that kind of team. I'm not saying that it's that they are saints, but what I'm trying to make you understand is that the team, the composition of the team, to also plays a big role. You look at the background, you look at track record. So basically, it's very difficult for someone that has had his names in the financial industry to want to tarnish or want to be involved in fraud. But most people they tend to jump in on the cake, the prize winnings and stuff like that. So the team too. Then lastly, then I think you need to emotional control, greed. You need to be contented with whatever you have, and you need to be also be able to calculate, have what we call emotional intelligence. You need to understand how to calculate greed. So, for example, when you see this aggressive, sending you spontaneous mails, sending you too good with good metrics, trying to play your emotions, then I think you need to be cautious. Then if you have a financial advisor, you understand that also will also give you some kind of pullback, because he'll be able to do some background check on that investment entity, try to tell you things like that. So basically, when you have all those things in play, very hard for you to be scammed.
All right, thank you, Olumide, for joining us today, and thank you for sharing your thoughts and insights on these questions and more. I hope to see you next Wednesday, and we'll have another fantastic episode then, okay? Enjoy the rest of your day.
Yeah, same here. Thank you.